Thanks, Marlon. Good evening, everybody. It's 5:30 on Sunday. Let's kick off another week. We're not gonna. I didn't rush through last week, but I thought that given the content we had, we could do it in under 10 minutes. It's certainly late August trading, and I'm really encouraging anybody I talk to take these couple of weeks away from the screen. Not you don't have to disappear, but what I'm doing is looking kind of get up in the morning, check things out, pre-market, trade the open, and by 10:30 or 11 I'm done for the day, and I'm able to get out and enjoy the weather. And I really, just given the nature of the trading and the people that I'm talking to, who are trying to force things, are regretting it. So that's just the first thing I'd say about trading right now. We don't get a lot of time to really enjoy ourselves, and this seems like it. That's one of the themes of the week. And then the second one that is we're going to spend a little bit more time on and digging on in a few minutes is the weak dollar. I start off right here. Weak dollar plays are very strong and broadening out. And we're going to go into this. I don't need to highlight it too much right now, but we've got a routine that we, scheduled routine that we go through, and let's do that. Little, not briefly, but, efficiently. I'm looking at this as first support. We're getting a little pullback. This barely shows up on the radar screen. I say somewhere, not on this slide, but it's hard to get bearish when first support hasn't broken. Again, a couple people I talked to like, oh, we pulled back a few days. Yeah, we pulled back a few days. That's it. But there's nothing here to indicate caution or bearishness or anything. Again, with the nature of the market and the environment, it's just we're drifting more than anything. But this is just a nice low volume pullback after one hell of a rip, after another hell of a rip. So this is just kind of consolidation, new high, and pulling back a little bit. Overall, not much to complain about. Again, I want to zero in here, and this is what I see as support. And we're not, driving towards it the way we drove towards new highs. We're just sort of drifting down here. So, buy the dip still seems to be the word of the hour. NASDAQ, a little bit different. This is what is it, 30,050, I think. Level really held here. I said buy the breakout. I did, and I had to stop. Well, I could say it was a little too tight. I got stopped out earlier than I would have liked. And what I didn't do is look at this as a potential failed breakout. And that's what it turned out to be. It tried to push and then just drifting down here. This is a good support level. We'll look at it here. What is it? 29,070, I think. I've got it written in here somewhere. But you can see how strong this level is. And then we pushed up and couldn't follow through. This is a few days. And when you're getting that, you really, have to be ready and stop out when it's not working. And then I should have been looking to get short for a move down towards the bottom. This was a miss on my part. So it's okay. Again, drifting. I'm trying to keep my head bullish. I do confuse myself when I'm looking for shorts too early. And that's one of the reasons I do this whole exercise, is to keep my head on and what my bias is. And my bias is bullish until things change, most notably rates. RTY, same thing, still solid. It's breaking out. It hit a new high, but it's not zooming higher. It just doesn't have oomph. I think that's what I have on the front page. Okay, here's where things get real. This is the 15-year trend line. I'm going to pull in and we're going to zoom in on TradingView in a minute. Same thing. We tried to break out. This is a big level. Goes back years. This is just as far as this is stretched out as much as I can get on the daily chart. We'll look at the weekly in just a minute. We had this breakout, it hung, and it couldn't go there. And then as soon as we came back in, I think I called it out right around here. I said, look, this is a failed breakout in the dollar. I wasn't buying it when we were going. And then when it broke back down, I said, I think we've got a problem here. I'm philosophically bearish, but tactically neutral. That changed right here. When we broke, and I was looking at it here, I put a little feeler on in gold. When this moved, I added, and I had a pretty good week. Gold and silver and copper, real assets. Again, we're going to talk about that in a minute. Let me see if I can do this. There we go. That worked better than I thought. This is the long-term dollar chart. This low, Monday, May 11th, May 9th of 2011. Confirmed here in 21, confirmed here again several times. This first one, June of 25, this has been going right in here. But that is a well-established trend line going back to 2011. Is that 15 years at this point? I've called this out on this call a couple of times because I do think it's very, very important. You can see how well it fits in here. Then when we zoom out a little bit, it's held. It's held. Little failed breakdown here, right back up. And now this support level, which I drew in a couple weeks, we broke that. So this is how big the dollar move was this week. And then, pardon me. We got, oh, sorry, I got to skip ahead here. Where did I put my weak dollar plays? I'm sorry, guys. I messed up the charts. I've got it in here somewhere. We'll talk about it in a second. But this is not a huge move, and we're going to go in and here, I'll do it like this. That makes more sense to me. This is the response we got in copper names. Silver doesn't look as great because it got so extended last fall. This thing was nuts. But this is a hell of a move right here. 51 to 62. That's August 4th. Today's August 23rd. That's a hell of a move there. Gold, this went right where I thought it would. See, I talk a lot about these histograms on the right in the high volume area. I talk about it a couple of times in the report. We got right there and quick. This was where I wanted to be value buying, but couldn't do it. Bought it right when we broke here, added when we held above here, and then added even a little bit more this week. This, I think, could be a very big trade into the election. We're seeing a lot of efforts coming out of DC to ensure the economy and the markets are intact, and I would argue that's influenced by the upcoming elections. The interactions with Iran, how we're handling that, pulling out, okay, declaring we've won in peace and everything when arguably it hasn't been wrapped up, intervening with the yen, and then this week announcing intervention with yield curve control. That's what I call it. I don't think that's what Besson calls it. All of this to try and keep rates down, keep everything intact. And I think this happens at the expense of the dollar. I'm not going to go into it too much. This is people around this call for the charts. But I actually do have a pretty extensive fundamental background. Global macro is not my sandbox, but I'm conversant. And when I look at some of these steps that they're taking, it's clear what their priorities are and their priorities aren't. And kicking back into the charts, you can make a hell of a case that it's not working. They're trying to keep this under control. And with the steps that we're taking and the reactions that we aren't getting, that is telling. So changing gears just a little bit, this is the biggest risk in the markets for equities right here. If this breaks, I'm going to change my position. I keep saying it's like I'm not going to change until it changes because, it's been like this for a couple of years now. Again, I talk to a lot of people, hear a lot of thoughts, and yeah, I don't disagree, but I just have my own set of parameters that say, okay, this is when I'm going to really start to change my outlook. And I've been fortunate to stay bullish most of the year. Same thing. This is yields. It doesn't look good. Yeah, I say if this was a semiconductor chart, who wouldn't want to buy it? It's rates, and it hasn't gone yet. So just be patient, and when you get your trigger, that's when you respond. That goes for every trade, not just this one. So overall, market is still quite intact. Just a little pullback so far. As I said, we haven't broken first support. You can't overreact. In aggregate, this is just a big consolidation. It got a little weak. I said, don't overreact here. Don't overreact here. Don't overreact here. This looks healthy. Again, when things change, it's been bullish long enough. Some people think I'm a perma bull. Really not. But I just need something to change for me to get involved. This is an interesting chart I saw this week. It was on Twitter, and if anyone's curious, I can point you at it, but I can't remember right off the top of my head. Real yields. And they're pointing to look what happens to the market when these break out, even just a little bit. That's a coincidence. We all know that's COVID. This broken had a hell of a move, and 2022 is not a lot of fun, but that's not terrible. And we are right at an inflection point. That's not surprising because every other chart in fixed income is right at the inflection point too. But it is an interesting perspective, and I think when you think about the fundamentals behind it, it's worth monitoring. So another data point to monitor. Put them on your yields there. Put your on your screen. But this is the overall market. I was gushing a week or two, like who wouldn't want to own this chart? Okay, now we're going sideways. Of course, there's climbing and consolidation, and if when something breaks, we'll talk about it. This is a very comfortable, pullback. Okay, yeah, it's a little worse in value. It's growth and tech and AI and everything like that. It's more volatile. No surprise there. A few weeks of digestion after the surge higher, the bottom of the high volume area did hold. Okay, this is something I've been talking about. Again, this is the histogram that I point to. You got your low volume area. This, when we pulled back, I said, I wonder if this is going to hold. Well, lo and behold, sorry, no pun intended. This really works, and I'd be looking, if anyone's in this is what I'm looking for. That's a decent target, and take profits, and that's going to be very relevant when we get to BNO in a second. This is pushing higher. Everything looks okay. EM, again, we've said a bunch of times, this is heavily influenced by Taiwan, South Korea, and the semis that have this. So it's not really reflective of what I have it in here for, and that's weak dollar plays. This looks fine. It looks fine. I don't want to spend a lot of time on it. Okay, yeah, tech took it a little harder this week. I did switch up my inputs here. This is not FinViz. This is TradingView. What's going on there? There we go. But it looks okay. There's a lot of red on the screen, but this is, important segments of the market that are doing okay. And this is not terrible. Google, this, okay. A couple got hit a little hard here, but these are volatile as well. There's nothing I see here that concerns me. Crude, absolutely a weak dollar play. It has its fundamentals and the geopolitical, macro drivers that are all get talked about a lot more, but weak dollar absolutely plays into this. I've been talking about the levels in here for a while, and they continue to work very well, and I really think this is our target. I think we're getting here. It might slow down a little bit because of something I'll show you on the next screen, but that's how I'm looking at it. And then I can't imagine this breaking out and really surging higher without some sort of news event out of probably the Middle East, might be out of the US, but I was a little too bullish back here, and we saw what happened, and then we got the pullback when we won the war and things like that. This one, again, I talk about these high volume areas on the histogram. I do it because they work. I called it out when this broke. I said, okay, not too concerning. We came down here. And I personally got involved when we moved back into this high volume area. I was like, this is a great risk reward. That would be, I'd risk this for that. And we're right here. I took half off this week. I'm riding with a little bit, and my stop is much tighter than it was before. I'm not going to risk this move, but I'm also giving it a little legs in case we can push up to here. But I've booked half of it. That's a nice trade. Happy to do it. So yeah, and if we come down here, I'll be looking for an entry. I'm not looking to short this. It certainly could be a trade. You can put your risk. Your risk is if we break out and this is your target. That's very reasonable. I'm just not doing it with the dollar drivers and geopolitical uncertainty. Natural gas, I've been talking about it. We're getting close to the shoulder season. There may be something to talk about in mid-late September, but right now, all it is a change of character and hanging out near the highs. Okay. Gold. This is the big beneficiary. As I mentioned, I wish that I bought in here. I didn't. I bought as soon as it broke out there. And when we pushed through this, I was like, if we can even pull back here, that's a sign of strength. There's our follow through. I have not taken any off. I'm going to think about it because I should. My own rules say I should take at least a piece off. I'm like, all right, let's kind of see what happens. But with this kind of reaction to a pretty small move in the dollar, following this and my own philosophical bent, I'm not in a rush to take this one off. But here is the message: weak dollar plays are working. Just keep them on your radar screen. A lot of people just trade check and tack and things. I think that for the balance of the year, these are going to be close to, if not at the top of the in-play stocks. Keep it on your mind. Here, this is the chart I was looking for before. Sorry, I misplaced it in the deck. Silver doesn't look that compelling. I think it is compelling. Got a little bit here, not much because this is nuts. And it usually runs later. When gold starts to get extended, that's when I'll really move into silver a little bit more. Energy, absolutely weak dollar play. Looks great. This is Freeport. Bought some of this week when it, just absolutely broke out. That's a great consolidation breakout. The fundamentals are great. I don't know how to measure this. I was looking into it, but somebody said there's 50 miles of copper in a data center. I don't understand the miles metric, but that sounds like a lot. Back in the day, about 20 years ago, I actually covered copper companies, and they used to say there was 50 pounds of copper in a car. And when copper went from $2 a pound to $3 a pound, and no one was not going to, put copper in the car because of 50 bucks. Well, no one's not going to build a data center because of copper prices going up. I just think they're going to continue to go up. The elasticity is very steep. It's very hard to price yourself out of using copper. And gold miners, they're going with gold. All these are weak dollar plays, ones that I recommend. So let's go. All right. Marlon, I see your question. I'll come back to that in just a second. I just want to wrap this up. Thank you. Uh, True to form, Bitcoin a week ago I said there is literally nothing to say here. And then I'm not sure exactly what day this is, but it goes up essentially 20% in a day. And I would argue there's no way in a chart you could see this coming. Is it a weak dollar play? Absolutely. But there was a little other than that to suggest it's moving. If you want to say, hey, weak dollar, Bitcoin's my vehicle, you did great. And this is, I think, back in play for a few weeks to months now. I've been saying there's nothing to look at. Now there is. Let's pay attention. Let me come back to you. Good question. So for anyone on YouTube, I guess you can't see the chat in the room. I get a question. What does natural gas shoulder season mean? And what is an example of a dollar play, and what makes them a dollar play? Okay. I'm going to do those in reverse order. What makes something a dollar play is that it's highly negatively correlated to the strength of the dollar. Generally, they're materials that are exposed to inflation that appreciate well in inflation. Inflation is inherently bad for the dollar. Reduces purchasing power of the relative currency and the real assets. Things, as someone I used to talk to about this, John Mendelsohn, he used to say they hurt when you drop them on your foot. That's how you know what a real asset is. Bonds, stocks are paper assets, they're financial assets, they're constructs. Real assets are very simple: gold, silver, copper, oil, gas, real estate. They're all examples. And when the purchasing power of the dollar goes down, it goes down relative to a fixed asset, i.e., a real asset. So those are the names that we're talking about. Bitcoin is the fancy one, right? The technologically driven one that is in theory a real asset and maintains purchasing power. We can debate that later. But those are examples of weak dollar plays, and that's exactly what makes them a dollar play. Natural gas shoulder season is different. That's simply just a seasonal element of the energy market where a lot of I got to try and remember the specifics on this, but there are different demand drivers in the summer versus the winter for natural gas. And the demand cycles get changed, and they call it the shoulder. It's just the shoulder. Summer is all air conditioning and power production and natural gas turbines and things like that. In the winter, a lot of the Northeast is driven by natural gas heat, and they have to divert natural gas to different places. Also, we're in the unique situation where the U.S. is probably going to be a swing producer for natural gas for overseas, specifically Europe. Going back, there was a large facility in Qatar that was estimated to be about 17% of global production for seaborne natural gas. Japan's a huge market. I think China, I think Korea, I know Japan, and certainly the EU. And that facility was bombed in the war and is out of production. I originally heard like 5 to 7 years. They're bringing that down 2 to 3 years, but most definitely for this winter. And the US is going to be in the position of being the swing producer and exporting natural gas at a time when we need more natural gas, which will logically make the price go up. And I think that's exactly what got factored in here. I'm almost certain that this did this when, like the day the Qatar facility was bombed. And this is like, okay, wait a minute, let's see how it plays out. And then we're going to get a lot more indications of demand drivers when we start looking at inventories in the EU going into the winter. A couple of years ago, when Ukraine started to have their conflict, who are a swing producer of natural gas, there was a lot of hand wringing concern about Germany and Poland and other northern EU countries' ability to get natural gas and to keep the heat on. They've done a pretty good job, but things are getting incrementally worse, and I just think that means incrementally higher prices. I'll do a little research on that to get some more specifics. That's all from memory, but it's accurate. Just I could, fill out some details there. But thank you for the question. Get back here. I think we were on Bitcoin. And yes, we'll start to wrap up. Energy still looks great. Real asset again. Refiners are doing fantastic. Diesel is leading the charge. That's the most in demand. Oil derivative, and I probably should be playing diesel instead of Brent oil, but a little late for that. The majors look good. E&P looks great, and then this is the XLE. Semiconductors, yeah, a little pullback, nothing concerning. These had a great rip over here, and then consolidation, just a little pullback. Same thing, great rip, little pullback, nothing at all concerning. This again is K-Web, it's China, so I don't emphasize that very much. Consumer discretionary looks good. I saw some headlines that said we'd seen Target and Walmart or something like that with big pullbacks. I didn't get a chance to look at it. Healthcare looks great. Little pullback in industrials. Again, nothing terribly concerning. Just, okay. And then financials overall look great. Here's where we are in the channel. I do think that we're trying to get there. I will kind of change my opinion if we start peaking up here. Again, we can pop out of the top, although it's the exception, not the rule. This just tells me that over a very long-term time frame, 2009 low, we're pretty extended, but I'm not going to get bearish because of this. This is not a reason to get bearish. It just gives context. And small caps, I think, could have a lot of room to go towards the top. We'll wrap it up there. As always, happy to take any questions. Thanks. It was Marlon who dropped that one in. If anybody else does, throw them in the chat and YouTube. And yeah, I'll repeat myself just a little bit. Get outside. It's beautiful. I'm outside Philly, and it's spectacular out. I'm going to go for a walk and maybe to the pool. And yeah, we will go from there. So thanks very much, and good luck.